Hi everybody, it's time to take a look at housing statistics for San Diego County through January of 2025. I'm going to take a look at the sales prices, the volume, the supply and demand for detached housing in San Diego County, and I'm also going to look at some rental markets and show you some concerning things that are happening there if you're an investor. But first, last month, I recorded my analysis of what would be the drivers for real estate this year. And basically, it's interest rates, but I explain how that's going to work. And I will stick a link to that video up above my head here somewhere. Also, if you are interested in real estate development, I recently did a video that's the ABCs of construction loans. So, designed to help you understand how you get financing and how the financing works when you are building a duplex or a house or any kind of property. So I'll also stick a link to that if you're interested. So without further ado, let's get going. I am going to focus mainly on detached housing for the purpose of this video. The statistics are pretty similar trend-wise. You're not going to get a big divergence between the detached and attached. So we'll just try and keep this video a little bit shorter and more concise by just sticking with the detached. So this is a 3-year look at the median sales price for detached homes in San Diego County. You can see that in January here we had a nice little increase. That's about a 5% month-over-month increase, putting us 7.5% above last year and about a million, right about $1,050,000. Now, don't think too much about that jump in prices. Let's take a look at a 10-year graph so you can kind of see what the trends typically look like. So here's a 10-year version of the same graph, and I just want to show you kind of what the trends are. So typically December, January's are a low. You can see it here. Come back up, we've got a low here in December, then it take off again. We got a low here in December. Come up here, we got a low in December. We've got a low in December, January. We got a low in December, and then another low in December. So that's basically because the only people selling over the holidays have to sell, and everybody knows it. And therefore, the prices, the buyers get a little more aggressive, and sellers, there's not as many buyers, so sellers have to take lower offers. So not unusual. We saw a jump. That's why we want to look year over year rather than just month over month. So expect that next month will also continue to increase with kind of the launch into 2025 and kind of the new, more exuberant type feeling we're seeing overall in the business market, not necessarily housing, but it does look like it may carry over to pricing. What drives pricing is supply and demand, and so this is the supply, the total number of active listings. I want to point a couple things out. However, I just do want to say that we are about 24% above where we were last year with 2,367 active detached homes on the MLS. What I want to point out is this data here. This basically shows you that you can't rely on the MLS data too much, because there is literally no way that in January of 2023 we went from 1,976 listings, shot up to 4,755, and then fell back down to 1,700 the next month, and then back up to 4,700. So this is bad data. This is also bad data. So we can't rely on it too much. However, the thing I like to show you in general about active listings is more of a trend. And if we go back to 2004, this was obviously the bust. You can see how small the supply has been basically since COVID. So yeah, the supply continues to be a whole lot smaller, step function smaller than it was before COVID. We've got a lot of people who are trapped in their homes by their loan. If you've got a 3.5% loan, you're not selling it, buying anything close to as nice as what you're in now at a 7% interest rate. Let's look at the number of solds. And once again, you can kind of see this is the same. Here's the summer, here's the winter kind of pattern we see. And then you can see the significant drop off that we had coming in 2022, 2023, and it's just stayed down. So this is why you get the people in real estate kind of crying about the fact that there's not a lot of business. They're right, there's not. It's a fraction of what it used to be, but that is a factor of there being no homes to sell. I like looking at the market time because it's kind of a leading indicator. Market times tend to go out as the market's softening, but before it really hits the pricing levels. So we can see here that we're definitely on a pretty heavily increasing slope. We're up to a month as a median market time. Our average is actually close to a month and a half. And compare this back to where we were just, May of last year, where we were at 11 days. Houses are sitting on the market a lot longer. It really behooves you to take the time to prepare your house right, because there are other options out there. While inventory is still low, demand is lower also. Therefore, the buyers have more choices per buyer, and we're seeing be a little more picky, and things are sitting a little bit longer. We're not yet seeing prices come down. We saw that towards the end of last year, but we're now starting to see a little bit of pickup again that we typically see in January. So we'll flush out by the time we get through March. We'll know if prices are still on the move up or if that was just our standard correction. This is a screenshot of a program I use to check rents. This is called Rentometer. It's their pro version of the software. And here I'm looking at a property in the City Heights neighborhood. This is a neighborhood where we actually own some rentals and we're doing some development. Thing I want you to notice that this is looking at 2-bedroom homes over the last 12 months in a 3/4 mile radius of this particular address. And we're looking at houses only. So this is not looking at condos or apartments, all right? And you can see pricing, steadily increased here, and then kind of tailed off a little bit, but not too incredible, down about 7 or 8% in the last year. Not what you want to see as a property owner, but I want to show you something else that is a lot worse. All right, here's the exact same search, but looking at apartments. And you can see that October 2023 was a peak, and then the market started to come down. And then it really came down hard here once we got past July, August of this past year. Now, what's the cause of that? Well, July, August last year, it started to look like Donald Trump might actually win, and we might get serious about immigration. What we are seeing in the City Heights areas and the Logan Heights areas of San Diego, where you're heavily immigrant for your housing, is that the lower end of the housing market, which is the apartments and the condos, we're seeing the market drop precipitously. And that is just because people are not there anymore. This is not affecting other areas like Carlsbad, Rancho Bernardo, Scripps Ranch. This is just the areas that are heavily populated and heavily influenced by immigrants coming in and taking housing, because as they're leaving, nobody's filling it up and rents are falling. Thanks for sticking with me. I hope that made sense. If you have any questions, just give me a message down below and I will do my best to answer it. Once again, if you're interested in the video that talked about where I think the market is going this year based on interest rates, I'll put a link in the bottom. I'll also put a link to the video on real estate development and construction loans. If you got something out of this video, please go ahead and subscribe. Thumbs up would be great too, but subscriptions really help. Thanks a lot, and until next month, I'll see you later.